Okay, now today's main emphasis then is going to be expanding on this particular process, but taking the earnings account, which until now has been one account down here in the capital section of the general ledger. And we're going to expand that into a whole bunch of sub-accounts, okay? See, the problem is, right now, this month, this company has $2,200 in profit. And that may be good for that company, especially if it's the first month of that company's operation. That may be better than they ever expected to get, right? Now, next month, they might have $5,000 in profit. Is that good? Yeah, that's better, especially if that's more than they were expecting. And if next month their profit's $10,000, heaven's sakes, this guy's excited. He's got a great idea, good company going. So he's gotten bigger and bigger and bigger. And then next month it drops back to $4,000. Now what's the owner going to ask? Why? Why didn't it go higher? Why have I done so well and then all of a sudden dropped off? Isn't that a fair question? And is that something that the owner needs to know? So that they can, if there's a problem, repair that problem. Arrest it. Correct it. Okay? And so, having just one number oftentimes doesn't give us the information that we need to be able to determine what's happening in this company. So we've taken that one account and we're going to break it into a whole bunch of smaller accounts. Now, what causes earnings to go up? Sales, okay? So, we're going to break out an account called sales. Now, anything that causes earnings to go up, is it a debit or a credit? It's a credit to sales, right? The debit is what we got, the cash or the accounts receivable. But then we credit earnings, right? We credit earnings and that causes. So would you expect sales to be a debit or credit account? Credit. Okay, because it's going to show earnings increasing. So most entries are going to be credits in a sales. Now, can you have more than one sales account, do you think? You know, if you had a convenience store and you wanted to keep track of sales of groceries separate from sales of automotive supplies, separate from sales of dairy products, could you have 3 different sales accounts? Sure, you could. And oftentimes we have more than one sale account if we want to keep track of it that way. Okay, so we might have sale number 1, we'll have another account, sales number 2. And these are just different product lines, okay? Sales number 3, just to keep track of for our own information, okay? And we might have credits going into each of these depending upon what it is we're selling. And then we know how much we sold of each of those products. Now, what causes earnings to go down? Remember, we talked about one word that started with a C that causes earnings. Consumption, right? Causes. Now, what type of consumption do we have in earnings? We talked about 2 different things yesterday. Okay, that's one type. I'm going to try to break it into 2 large categories. Expenses were 1, that's what you're thinking of, and cost of goods. So we have, remember that when we sell inventory, we credit inventory and we debited earnings for the cost of the inventory we sold. That's cost of goods sold, okay? And so we could have an account here for cost of goods sold, okay? That shows the cost. And is that going to be a debit or credit account? Debit, because it reduces earnings, right? The cost of that merchandise will reduce earnings, so it's probably going to be a debit. Could we have multiple costs of goods sold? If we have sales of furniture, could we have a cost of furniture sold? Sales of appliances, cost of appliances sold. Sales of televisions, cost of television sold. Can you see that? So you have multiple cost of goods sold. And what was the other one that we mentioned? Someone mentioned it, Ed? Expenses, right? Okay, and so expenses, now these are accounts, and we can have 20, 30, 40 different expense accounts. One for advertising, one for salaries, one for, what'd you say, Michael? Payroll taxes, or other tax, property taxes. We could have one for supplies and all those things that we consume. Now, the difference between cost of goods sold and expenses is that cost of goods sold relates directly to the sale. Okay? Expenses are those other things that we have to pay, like rent, that are part of making the sale but aren't attributable to one specific sale. Do you see that? You know, can we pay rent one month and have a lot of sales, and the next month pay rent and have no sales? Could we do that? You know, so the expenses don't tie directly to the sale, but they're things that we have to have in order to make those sales. We've got to have that building if we're going to make those sales. We've got to have that advertising if we're going to make those sales. So we could have a lot of different expenses, and will they, since they're causing earnings to go down, will they be debits or credits? Debits, okay? So again, we could have a lot of different expenses down here, okay? Lots and lots and lots. Again, name some expenses just so we got that figured out. Utilities, good. What else? Telephone, rent, good. Office supplies, payroll, advertising, insurance. See, you got it. Okay, you got the idea? These are all things that we're consuming, that we're using up in the process of making those sales. Okay, I want you to turn to page number 616. City Cycle Company is one of those two companies that we've looked at several times during the last few days. We've looked at the balance sheets, the assets, liabilities, accruals, and capital sections, and you'll see those accounts down the left-hand side of that page. Now, down the right-hand side are some new accounts that we haven't dealt with before. Up in the top half of that list, we have our sales and cost of sales, okay? Beginning with new Honda sales. This is a motorcycle dealership, and they sell Honda motorcycles, okay? So anything we get for, let's say someone comes in and buys a Honda motorcycle for $5,000 and they give us cash. The entry would be, of course, a debit to the bank, right? We're going to increase the bank account. What's the credit going to be to? Yeah, up until now, it would have just gone to earnings, right? Would have been blended in with all the other sales. But now, we're going to credit it directly to this sub-earnings account called New Honda Sales. Do you see that? So that we can accumulate all the sales of new Hondas separately from the sales of the other types of motorcycles that we sell. Do you follow that? And keep track of it. So again, it will be a credit. Now, it's almost all the entries to sales are going to be credits, aren't they? Could there be an exception to that? If someone were to return the motorcycle, that's the exception. We hope it's the exception, right? Okay? Yeah, we can do it that way. Or, of course, we could have a separate account for returns if we wanted to, if that were happening a lot. And on department stores, grocery stores, they do have a separate account for returns, but they're smaller items. In a business like this, we might actually debit the sales account. Or we could give it, they could come back in and say, hey, listen, this is broken over here. Would you discount it for me? And we could reduce some of the sales. So, but those are unusual situations, and so most every transaction that you enter into one of these sales accounts will be a credit, right? Okay, let's go down this list real quick. First thing I want you to do is down to the left side of the sales cost and down through the expenses, I want you to draw a great big bracket, okay, encompassing that whole list on the right-hand side of your page. So just make a big bracket down that right-hand side, okay, encompassing the whole thing. And then I want you to draw a line from that bracket down to the bottom account in the capital section called annual earnings, just to further emphasize what we're doing here. And then draw a line down to annual earnings. I want you to understand that that one account that we've been working with today so far, and earlier, has now been exploded into all of those, that whole column of accounts. Sales, cost, and expenses. Is everybody with me? Okay. Okay. Let's look at the first account. Honda sales, is that going to be a debit or a credit account? So put a C to the right or left side of that account, that title. Okay? New Honda costs. This is the cost of the Honda sold. Is that going to be a debit or a credit account? Debit. So put a D next to there. Next to new Honda costs. Okay? Go ahead now and continue down through there. Just the first section, sales and cost of sales. Just identify which one of those are going to be credit balance accounts and which one are going to be debit balance accounts.